Bismillahirrahmanirrahim. Hello and assalamu alaikum, everyone. Welcome to Practice to Pass webinar on paper F2 MA Management Accounting, which is being organized by ACCA Pakistan for June 2021 exams. This is day 1, 17th of May 2021, and I am your tutor Haris Hanif, and this is my WhatsApp number. First of all, I would like to make sure whether my voice and screen is all clear to all of you. I encourage that you people reply me on the question box. My voice and screen is all clear. I encourage whether all of you reply me on the question box so that I can start with this webinar. All right. Okay, that's nice. So let's start with this practice to pass webinar on paper MA Management Accounting. And as I have mentioned that this is my WhatsApp number in which you can contact me. All right, so let's start. First of all, let's have a very quick and brief introduction about myself. I am Haris Hanif, ACC affiliate and graduate in commerce. I do teach in Tabani's School of Accountancy, TSA, which is the platinum approved institute in southern region in Karachi, Pakistan. And I do teach paper MA, PM, AA, and AAA exclusively at Tabani's School of Accountancy. And I had started my career in a bank, and then I switched to the textile company in Karachi, Pakistan. And I also taught in different other approved learning partners. And my overall lecturing experience is more than 10 years, more than 11 years plus now. So this was about the very quick and brief introduction about myself. And right now I'm going to start this webinar. So let's move ahead. And this is the schedule of the webinar. That's from 17 May till 21st May. These are the 5 days webinar. And per day, we have 3 hours. The time is 11 a.m. till 2 p.m. PST. That means Pakistan Standard Time. And this is your syllabus area. First of all, let's have a quick recap of the syllabus area, and then I will be explaining that what are the important areas to focus on. Actually, the main agenda of this webinar is that you can revise the core areas of your exams so that you will be able to pass, and that is the slogan, that is practice to pass. And this is a very good initiative by ACCA Pakistan to organize such kind of webinar for the students. And this webinar will be entirely focused on quick recap of the topics and then more focus on the question practice. As you can see that there are many questions which I have compiled here in this webinar, along with such kind of OTQs as well. OTQs worth 10 marks. So first of all, we need to discuss about the syllabus areas. Then I will be starting with my today's agenda. So this is MA syllabus area, and we have got section A, section B, C, D, E, and F. There are total 6 areas, in which first of all, nature, source, and purpose of management information. What is the purpose of management information? That's the management role is planning, controlling, and decision making in various aspects. Section B is about the data analysis and statistical techniques, and this data analysis is now the emerging topic in every professional accounting body because it's a requirement of your practical life. So Number C is cost accounting techniques, in which there are different cost accounting techniques like material, like labor, like overheads, etc. And these three sections are the core areas for paper MA, management accounting. These three sections are the core areas: budgeting, standard costing, and performance measurement. You are probably familiar with the course contents. Yes, because that's why you are here. That's why you are here for the practice to pass webinar. So uh, just a minute. All right, all right. These are the syllabus areas in which there are different chapters. And now I am moving ahead. All right, students, uh, one clarification is that in your section of handout, this handout is already attached. So you people can see that handout in which I am writing. You people can save this handout. This is attached in the handout section. All right. Now, this is your paper format, and your paper is obviously CBE, computer-based examination. Your paper is CBE, that's computer-based examination, and you will be receiving the exam into two portions, into two sections. Section A, in which you will be having 35 objective test questions worth 2 marks each, totaling 70 marks. And let me clarify you that these 35 objective test questions can come from any of syllabus area. Yes, this is not defined. This is the initial step to focus on the exam, that how the paper will be structured. The paper will be structured like a manner that these 35 objective test questions can come from any of the syllabus area, any of the syllabus area, any of the syllabus area. These are the syllabus areas. So those 35 questions can come from any of the syllabus areas, all right? Any of the syllabus area. But there is section B, in which you will be receiving 3 case style questions. Now, what is case style questions? I can show you the demonstration first of the case style questions. Each case contain different objective test questions like MCQs, box filling, etc., worth 10 marks each and totaling 30 marks. Totaling 30 marks. All right. Totaling 30 marks, because there will be 3 case style questions, and students also call it MTQ. That's multiple task question. And the good news is that these 3 case style question, section B, MTQs will be examined from budgeting, standard costing, performance measurement, and may it's not defined, and may also include the forecasting techniques. That means I call these 3 areas as the core areas. Why core areas? Because you will be having 10 marks, 10 marks, 10 marks from these areas, and that was worth 30 marks. If you can prepare well for these sections, I can assure you that you will be pass the you will be able to pass the exam. If you can if you can objectively prepare for this, for these sections, that is budgeting, standard costing, and performance measurement. And also the good news is that I will be covering all these three areas, inshallah. And one thing more, we also be covering the above areas as well. So the main objective of this webinar is to prepare you and so well, that is you can that is so that you can pass your exams. All right. So these three objective test questions worth 30 marks, because out of 100 we need 50% to pass the exam. 50% to pass the exam. And these three areas are the core areas because of the confirm 30 marks. All right. So, and those 35 questions can come from any of the syllabus area. I cannot say the name of any of the section, because these things are written in your syllabus guide, which you can also download from ACCA website. All right. So uh, these are my day wise plan. Today is day one, and we will be covering budgeting. It's Yes, it's a very important topic. And one thing I would like to give you the feedback, based on the feedback of many of the students, that above 35 objective test questions also include from these sections: budgeting, standard costing, and performance measurement. So these are the three important areas. As I have mentioned, you should also note this thing: budgeting, standard costing, and the performance measurement. All right. So this is my day wise plan. Day one, budgeting. Day two, project appraisal. Yes, project appraisal. This is also the part of the budgeting, which includes the time value of money, that is net present value, and all that stuff. On day three, I will be covering standard costing and variances. On day four, I will be covering performance measurement. And these sections will ensure you more than 30%, more than 30% marks. All right, more than 30%, because of the OTQs and MCQs as well. And on day five, I had planned to cover other areas, and it will be mixed areas of the remaining topic, mixed areas of remaining topic. And that is main focus on the MCQs style of the question, so that you will also be able to deal section A kind of question, that is objective test questions, MCQs. All right. So I hope you people do understand what I'm trying to say, and which areas to focus on specifically, to focus on for the paper. All right. So uh, before going to start my today's agenda of budgeting, I encourage all of you to come on the question box and type if any of the question, if any of the student have any question up till now, students, just reply me on the question box, so that I can assure myself that you people are present and I can move ahead for the topic. Everybody, please reply me on the question box. Any question? Because I believe that teaching is not a one-way communication. That is, a tutor is busy in explaining the lectures and all that stuff. I believe in the two-way communication, so that we can make this webinar more productive. And in order to make this webinar more productive, I encourage all of you to raise the question if any. And if you have any question later on after the webinar as well, you people can also WhatsApp me. Is that necessary? One question is from a student. Okay. I appreciate that all of you had responded me very well. One question from Mr. Usman is that is that necessary that MTQs will be from these specific chapters only? Yes, Usman. As I have told you that these MTQs, these three case style question will come from these sections, and this is written in your syllabus guide. This is written in your syllabus guide. All right. Probably not today. Probably not today. Maybe tomorrow. I will also be sharing with you the materials which are available on the platform by ACCA by visiting the ACCA website. Probably not today, maybe tomorrow. So everything is clear up till now as per your feedback. And right now, I am going to start our first topic, which is the agenda for today's session, budgeting. As I have told you that I will be displaying a demo of the OTQ, that how the OTQ will come worth 10 marks. Case style question. This is just like that. Just like that. If you can see that, this is just like that. See that there is a question that Baba Limited is a manufacturing company. Question 1, 2 marks. Question B, 2 marks. And that is 2, 2, and that 1, 1. This totals become 10 marks. So this is known as the MTQ. All right. So I cannot say that whether per question worth 1 mark, 2 mark, 3 mark, or 4 mark. Nobody can ensure, because it will be a surprise and you will be receiving in your exam. All right. So now let's start with our agenda. All right. This is day 1 and we are going to start budgeting. This is my budgeting area. Okay. So what is basically the budget? What is basically the budget? The budget is an organization's plan. See, this is not the prediction. This is your plan. And plan means which we wish to achieve. For example, that I had made a budget. I had made a budget that I will be producing, for instance, 1,000 units, and according to me, 1 unit will be produced in $2 per unit. So my total budget is $2,000. All right. So what is basically the budget? The budget is anything which is your organization plan for the upcoming period. Obviously, we will be making a budget not for the past, not for the present, but budget is being prepared for the future, for the upcoming period. And that upcoming period is known as the budgetary period. Is known as the what? Is known as the budgetary period. So the budget is an organization plan for the upcoming period. Now, the functional budgets. What are the functional budgets? Functional budgets is simply means departmental budgets. Functional budget simply means departmental budgets. Now, what do you mean by the term departmental budgets? Departmental budgets includes the budget of different departments, like sales budget, like purchase budget, like production budget, etc. Obviously, there are some hierarchy on the departmental budgets. All right. So there are some departmental budgets hierarchy, and I will be explaining that hierarchy in my upcoming slides. But what I am trying to say that these are the budgets of different departments. These are the budget of different departments, like sales budget, like production budget, like purchase budget, etc. Departmental budgets. And the point to be noted is that all these budgets depends on each other. Depends on each other. That's why departmental coordination is necessary. That's why Departmental coordination is necessary. All these functional budgets depends on each other, and we cannot simply make a budget, and we cannot simply make a budget uh, in an isolation. We need the strong coordination among different departments in order to finalize the particular budget. All right, so let's start with the numerical questions. And this is my example. This is my simple example that we need to prepare the sale budget. See, remember what is the sale budget? Sale budget is basically that you need to have budgeted selling units. You need to have budgeted selling units, and you will be multiplying with the standard selling price. Standard selling price. Simply budgeted units multiplied by the standard selling price. So it will be a very good thing that first of all we should read the requirement, and then we should read the question accordingly. Now my requirement is that we need to prepare the sale budget. Example, Zota Limited has estimated the sales demand 2500 units for the next quarter. Yes, we got the demand 2500 units. Here we go for the demand, that is 2500 units, and the standard selling price is after 30% markup on the full cost, and in the full cost, and on the full cost it includes direct material, direct labor, variable overheads, fixed overheads, and the full cost is that 50, 10, 15, and 8.5. I encourage all of you that use your own calculator as well, and my full cost is 50 plus 10 plus 15 plus 8.5. That becomes total 83.5 per unit. And if you can simply add 30% of cost, 30% of cost, 30% of cost, so 83.5, 30% is 25.05, and that you will be having your selling price, that is 108.55 per unit. And remember this thing, in a markup the cost is 100%, the cost is 100%, the profit is 30%, and your selling price is 130%. All right, so what is the selling price you have calculated? 108.55. Simply multiply with 108.55 and see that this will be my sales budget for the upcoming quarter. In the upcoming quarter, I had estimated to produce 2500 units. Multiply by 108.55, and by multiplying with 2500 you will be receiving 271,375. Now this is your sales budget for the upcoming quarter. All right, so simply the sale budget is prepared by multiplying with the budgeted units with the standard selling price. And remember one thing, that standard selling price means estimated selling price for one unit. Standard selling price means estimated selling price for one unit. That is the standard selling price. So we have successfully prepared the sale budget, and remember this formula: budgeted units multiplied by standard selling price. Now, moving the next. The next budget is the production budget. The next budget is the production budget, and as you can see that in the production budget, And as you can see that in the production budget, I have already structured the format of the production budget and how to prepare the production budget. Simply, we cannot produce the units based on our wish. We cannot produce the units based on our wish. We need to prepare the budget based on the logical arguments, and that logical argument is the maximum demand. Now, for example, it is the budget to be produced in the upcoming period and it depends on the sale demand. Remember, production budget dependence is depend on the sales demand. For example, I'm writing here random figures. For example, if I have a maximum demand of let's say 800 units, then I must need to prepare the budget for 800 units because it is a maximum demand to fulfill. And I want that after satisfying this 800 demand, I should have 200 units as the closing inventory. So what I need to do, that is the required closing stock, I need to add it up. Now I will be producing 1000 units. How 1000 units? That is 800 units are the demand, 200 units are the units which I need to store as a closing stock. So I need to produce now 1000 units. All right. But when I look into when I looked into my store in the inventory records, I found that I have already available I have already available 30 units. I have already available 30 units. So 30 units are already present and I do need 1000 units. So what simply I will be doing? I will be deducting this 1000 minus 30 and I will be producing 970 units. All right. And remember this thing, this opening and closing adjustments, this opening and closing adjustment is known as finished goods inventory budget. Finished goods inventory budget, and that is 200 minus 30. That is 200 minus 30. So finished goods inventory budget means 170 units. All right, because after the demand I am adding 200 units and I will be deducting 30 units and totaling I have 970 units. So I need to produce 970 units, and my production manager was an experienced person and he said to me that, sir, it quite may be possible that we will be facing the loss. I said, yes, it quite may be possible. So he had estimated that 20 units may go waste. 20 units may go waste. So I need to add it 20 units. So I will now be producing 970 plus 20 is equal to 990 units finally. See, and it does make sense. When I will be producing 990 units, my 20 units will go waste and I will be having 970 units and 30 units are already present. So my 1000 need will be satisfied. So it does make sense. So this is now my final production budget of 990 units. But the point to be noted is that the closing required and the available opening stock, these collectively known as the finished goods inventory budget, and we should remember this thing. So this was the format of the production budget, and now time comes to apply this technique into the next MCQ. And the next question is that and I have already structured this format solution, and we need to go through the question first. And it's make a rule of thumb, that is, first of all, read the requirement and you should go ahead with the requirement accordingly. Now, what is written? Production budget in units for the product for the month of May. Units. You need to produce the production budget in the units. All right. So I am reading this question, and you should please focus on this question. It is written that budgeted sale demand for the month of May is 5000 units. Yes, if the demand is 5000 units, so I will be producing 5000 units for sure. I will be producing 5,000 units for sure, because it is the maximum demand which I need to produce. Opening inventory is 1,500 units. Now, what do you mean by the term opening inventory? These are the inventories which are left from the previous month, and we have it. We are having this thing. So we need to deduct this simply 1,500. We need to deduct, because it will not be the part of my production plan, because 1,500 units are already available. The next statement is that the company wishes to have inventory by the end of May, that is 70% of the sale unit. That is 70% of the sale unit. So required closing stock, in the month of May, that is after selling the 5,000 units, the company wishes to have 70% of sales unit. 70% of sales means 5,000. So 5,000, 70% becomes 3,500. And this opening and closing adjustment, 3,500 minus 1,500, that becomes total 2,000, and that is known as finished goods inventory budget. Finished goods inventory budget. So I am in a position to calculate right now 5,000 plus 3,500 minus 1,500, that becomes total 7,000. So, but I will not be producing the 7,000 exactly. Why? Because there is a loss expected in the production process, and we need to add up the margin of the loss. Why? Because the loss is the part of the production, and if I am expecting that I need to produce 20 units, but 2 units may go waste, so I need to produce 22 units in total. All right, because 2 units are the margin of the waste. And now here it is written that at the end of production process. Why I have show this statement in an italic form? That is at the end of the production process. At the end of the production process. At the end. Focus on the word at the end of the production process. At the end. 30% of the production are scrapped as defective. Now see that production is ended here. Production is ended here. Production is ended here. All right. So what is the statement written? That at the end of the production, 30% of units are scrapped as defective. 30%. And remember one thing, whenever the loss is applied on any figure, whenever the loss is applied on any figure, that particular figure is always 100%. Confused? I am repeating my statement once again. Whenever the loss will be applied on any figure, that particular figure is always 100%. Whenever the loss will be applied on any figure, that particular figure is 100%. Whenever I am repeating my statement once again, that whenever the loss will be applied on any figure, that figure is 100%. See what is written: at the end of production process, 30% units are defective. Now the production is ended here. See, production ends here, and 30% is of this particular figure, which is unknown to me. So that is 100%, because loss is applied on this figure. 30% of this figure, that is 30% of this figure. All right. So this figure is 100%. If this is 100%, so this must be 70%, because the loss is 30%. All right. So what I will be doing, and it is the basic rule of mathematics, that wherever you are, you need to divide, and where you want to go, you need to multiply. So we need to divide by 70 and multiply by 100. So 7,000 divided by 70 multiplied by 100, that means totaling 10,000 units. Totaling 10,000 units will now be your production requirement. 10,000 units will now be your production requirement. 10,000 units will be your production requirement. All right. So this loss thing, and this is the exam standard MCQ worth 2 marks. So remember this thing about the adjustment of the losses, and remember one thing: whenever the loss will be applied on any figure, that particular figure will be 100%. And I am repeating this thing once again, that 30% will be applied on the figure that is when the production gets end. That means this figure is 100% and this is 70%, and we need to add it. So so that you are in a position, to calculate the production budget. All right. So now we have prepared the production budget. And remember one thing, that production budget depends on the sales budget. Okay. So let's now move ahead for the next budget, and that is the material usage budget. Now, what is the material usage budget? It is simply that material usage budget. Material usage budget simply that need of material. It is simply the need of material. And obviously, the need of material depends on the production units. See what has been written here. The material budget needed to be used in the next period. It depends on the production. It depends on the production budget along with the provision of waste in materials. I am demonstrating this thing with the simple figures, that see, imagine that production units are there and we need to produce, for example, we need to produce 1,000 units. And in order to make 1 unit, I need 3 kilograms, for example. So that means I will be needing 3,000 kilograms. But again, my previous experience shows that 200 kilograms may go waste, for example. So in total, I will be needing 3,200 kilograms, and that is my material usage budget. Material usage budget simply means that what quantity of raw materials you need for the next period. Now I am on the question box. One question was from a student. Sir, does this session include information about CBE exam? Yes, I will be. I will be guiding you for the CBE exam. Probably not today, maybe tomorrow in the next episode of this webinar. I will be demonstrating about the CBE information, that how to tackle on the CBE format as well. So it may be possible either today or tomorrow based on the completion of the agenda. But for sure, this webinar will include the guidance to use the ACCA CBE platform and the resources which are available over there. All right. Okay, you're welcome. So this is the material usage budget, and let's apply this technique on the next example. Let's apply this technique on the next example. And the question is that, prepare the material usage budget. Prepare the material usage budget. Okay. So I am reading the requirement. Jojo Limited is a manufacturing company which produces a product, Alpha. The company had estimated that the demand for the upcoming period is 1,900 units. and company expected to increase the inventory by 200 units. See, this is the increase in inventory. So that means the production budget is missing. We need to produce production budget first. What is the production budget? The demand is 1900 units. Yes, the demand is 1900 units and company is planning to increase the inventory by 200 units. It planned to increase the inventory by 200 units. So that means 200 simply will be added. Now this 200 represents the adjustment of closing and opening. Yes, this 200 is the finished goods inventory budget. Finished goods inventory budget. So simply 1900 plus 200 equals 2100 units which we will be producing, and this is the production budget. All right. So uh, now we are in a position to prepare material usage budget. What is the demand? The demand is 2100 units, and to make one unit, all right, again there is a dodge in the question. What is written? What is written? For every 70 units, it needs 346.5 liters. 346.5 liters is for every 70 units. That means, that means, see above, 346.5 liters is for every 70 units. That means in order to make one unit, we need 346.5 divided by 70. That means 4.95 liters per unit. This is 4.95 liters per unit. All right, 4.95. So in order to make one unit, it needs 4.95 liters. 2100 multiplied by 4.95, we got 10395 liters. And this is not my answer. The expected wastage is 10%. Expected waste is 10%. And remember one thing, whenever there is a need, whenever there is a need, the need shows active need. And remember one thing, the active need the active need is always after the loss. So that means this is after the loss, of 10%, which means it is showing 90%. And as I have taught you earlier in the last slide that wherever you are, you need to divide. You want to go, simply multiply. Divide by 90, multiply by 100. So this will be my active material usage budget. Material usage budget, that is 11,550 liters. These are this is the basically the quantity of raw material which I will be needing, to for the particular production budget. All right. Yes, this is 90%. Fiona, Trish, this is 90%. This is 90% because this is after the loss. Is it clear, Fiona, Trish, now? And Mr. Yusuf Debu, which slide you are talking about? Which first slide you are talking about? Can you please tell me again which slide you are talking about, Mr. Yusuf? No, Fiona, Trish, we do not need to deduct the loss. The loss should be added because imagine, Fiona, Trish, I'm addressing your question that imagine that you need, simply imagine that you need 200 kilograms and there is an expected loss of 20 kgs. So you need 220 kgs, all right? 200 is your need and 20 kgs are the expected loss. So collectively, you will be asking that, sir, I will be needing 220 kgs. And when you will be having 220 kgs, the 20 units will go waste and your active need will be satisfied. Okay, you're welcome. Okay, upon the request of our student, you want this slide, sale budget? Hurry up, take the screenshot so that I can move for the next question. Mr. Yusuf, I think you got the screenshot of this slide. Okay, now, students, I have created a WhatsApp group for your continuous support even after the webinar. So the link has been shared in the question box. Probably it would be shared once again. Okay, so let's now move for the next budget. This is the material usage budget, and we need total 11,550 liters of raw material for the material usage budget. And now we are having the material purchase budget. We are now having a material purchase budget. Purchase budget. Obviously, obviously, my material purchase budget will be dependent on the material usage budget. Material usage budget. Okay. So first of all, let's imagine I am writing a random figure that, for example, I need material usage budget. For example, I need 2000 kilograms. I need 2000 kilograms. That is my material usage budget. And I want the closing quantity of 500 kilograms. Then obviously I will be purchasing more than my usage requirement. I will be needing 2000 kilograms and the closing quantity is 500 kgs. And when I looked into my inventory records, I found that 100 kilograms was already available. So I will be purchasing 2400 kilograms. That is my material purchase budget. And this opening and closing inventory adjustment is known as raw material inventory budget. That is raw material inventory budget. Okay. So material usage budget. After the material usage budget, we should prepare the material purchase budget, the material purchasing budget. Because when I will be going to the market for purchasing, I will definitely refer to my need, and material usage budget is basically my need. And see what had been written here. It refers the quantity of material to be purchased It depends on the usage requirement of the raw material. Opening and closing are also considered. So this is the material purchase budget format. Material purchase budget format. Now let's apply this technique on the upcoming question. And the question is that it is a simple question worth 2 marks MCQ, that prepare the material purchase budget. Prepare material purchase budget. And remember that in order to prepare the material purchase budget, I must have the material usage budget first. So let's read the question. Let's read out the question. And the question is saying that AH Limited. The question is saying that AH Limited had prepared. AH Limited had prepared the production budget. Had prepared the production budget. The company had already prepared the production budget, and the production budget is 5400 units. All right, and the production budget is 5400 units. The company had already prepared this. For the month of June, and it needs 7.6 kilograms to make 1 unit. It needs 7.6 kilogram. And whenever you see the word it needs, that means it is after the loss. That means it is what? After the loss. But in this question there is no loss. But in this question there is no loss. Okay, so I think I should not write this because you may be confused. To make 1 unit. Next point is that the company had estimated that closing inventory of material is 6,000 and opening quantity is 1,500. That means my usage budget is not ready till yet. And see, first of all, first we need the usage budget. First we need the usage budget. And see, there is 5,400 demand. The demand is 5,400 and that is units. And in order to make 1 unit, we need 7.6 kilograms. So that is basically the usage requirement. 5,400 multiplied by 7.6 is giving me the answer 41040 kilograms. That means now I will be in a position to prepare the purchasing budget. And see that this is my need requirement. That is my need requirement. Usage means need. So I will be purchasing 41040 kilograms. But the company wants that closing inventory should be 6,000 kilograms. That means after the use of 41,000 kilograms, the company should have 6,000 kilograms. So simply added closing inventory, that is 6,000 kilograms, and the opening quantity is 1,500. And the opening inventory is 1,500. And remember this thing, this totally collectively known as the raw material inventory budget. Raw material inventory budget, that is 4,500, is known as raw material inventory budget. So that means I will be purchasing. I will be purchasing this quantity. And the quantity is 41040 plus 6,000 minus 1,500. And that is giving me 45,540 kilograms. 45,540 kilograms will be the purchasing requirement. And 1 kilogram is available at $6. So that means what I need to do, that is 45,540 kilograms, and 1 kilogram is available at $6. So that means this is now finally my purchasing budget in dollars. Multiply simply by $6, that is $273,240. That is my that is basically my the purchasing budget in dollars. That is my purchasing budget in dollars, that I should be ready to spend 273,240. So as you people have noticed that budgets depends on each other. Budget depends on each other. That is why the departmental coordination is very necessary. And you might have heard the statement that this is one of the objective of the budget, that is to create the coordination among the different departments. What if the production budget is not ready? If the production budget is not ready, I cannot produce the I cannot produce this usage. And this is 5400 is the production budget. Oh, I wrote demand. Sorry, it was the production budget. It was the production budget. And what if my production budget was not ready? If the production budget was not ready, this budget cannot be prepared and this cannot be prepared. So that means the budget depends on each other. This was the production budget. I mistakenly wrote the demand. This was the production budget. So make it correct. This was the production budget. And if your one single budget is not ready, you cannot prepare the next upcoming budgets. So that is why the departmental coordination is necessary. Okay. So what was the budget hierarchy that we had discussed it? First of all, we will be producing sales budget. Yes. Then we will be producing finished goods inventory budget. And what is the finished goods inventory budget? Remember, finished goods inventory budget, that is the adjustment. That is the adjustments of closing units and opening units. Remember that? The finished goods inventory budget. Next, then we had produced the production budget, and after the production budget, we had produced the material usage budget, and material usage budget is your need. Along with the margin of waste. Okay. Then first, second, third, fourth, and the fifth, raw material inventory budget. And what is the raw material inventory budget? Raw material inventory budget, it is basically the adjustment of closing kilograms and opening kilograms, as we had discussed it in the previous slides. And finally, you got the material purchase budget. So this is the this is the budgeting hierarchy, that you are preparing the budget in following this hierarchy. Okay. So you need to memorize this hierarchy as well, because if you will not be producing the budget according to the hierarchy, if you cannot produce according to the hierarchy, then the budget will not be prepared as per the requirements. All right. Yes, Mr. Salman, the WhatsApp group link will be shared once again. It will be shared after a few minutes. Okay, don't worry about it. This is my WhatsApp number as well. You can also message me. Okay, students, so let's now move for the direct labor budget. Direct labor budget. And what is the direct labor budget? Direct labor budget, labor budget simple means hours of labors required. Hours of labor required. And obviously, the labor budget will also be dependent. It also depends on production budget. See, if my production budget is not ready, how can I, if my production budget is not ready, how can I produce the direct labor budget? No, I cannot produce it. Okay, so what is written here? MHH Limited had made the production budget 800 units. And next written statement is that per unit, the time of labor need 15.2. See what had been written. Labor time need 15.2, and this is idle time. This 15.2 is the active time. It is the active time. Active time means after 5% idle. So that means it is itself showing 95%. And labors are being paid for idle time as well. Labors are being paid for the total time. For the total time. And total time includes both active plus idle. Okay. So this is the active need, and need means always active time. After 5% idle time, that means it is itself showing 95%. And this was the mathematical rule that wherever you are, you need to divide, and where you want to go, you need to multiply. And see that I am having the production budget first. I am having a production budget of 800 units. This is 800 units. And in order to make 1 unit, it needs 15.2 hours. And 800 multiplied by 15.2 becomes 12,160 hours. And see that this is need. So this is also need. So that means it is showing 95%. And simply divided by 95, multiply by 100. And you will be simply getting the total time. And the total time includes active plus idle. Okay. So 12,160 divided by 95%, multiply by 100%. That means totaling 1 to 800 hours. And this is not my answer. This is not my answer. Labors are being paid at $8. So what I need to do, that is 12,800 hours multiply $8. 12,800 multiplied by $8. That means 102,400 is my labor budget. 102,400 is my labor budget. So this was a direct labor budget. I hope that you people understand this thing, isn't it? Is there any question up till now? Is there any question up till now? Yes, Mr. Saad Ahmed, you were right for 16 hours. Please reply, all of you. Have you got this thing? Okay. Uh, one student asked that, sir, in ideal way, we always divide. Yes, you divide with the total available time. multiply by the total time. No, Miss, no, Fiona Trish, if you will follow this thing, if you will follow this thing, 12160 plus 5%. That means what? That means you are treating this figure as 100%, which is totally wrong. This figure is 95% itself. If you are following like that way, Fiona Trish, 12160 plus 5%, that means you are calling this figure as 100%. And this is totally wrong. This is not the 100%. This is something which is after the idle time, which is showing 95% as well. So you need to divide by 95% and you want to go to the total 100%. That is why this is the wrong treatment. Fiona Trish, I need your response, Fiona Trish. Okay, you got it. Okay, you are most welcome. Sushila, your question is that how do we know whether it is 95 or 100%? Yes, it is written in the question. See that what's written. Idle time is 5% and need is 15.2. The need is always active time and that is always after idle time. So that means the idle time is 5%. That means it is showing 95%. Yes, Sushila, have you got this thing? You got it? Okay. Okay, that's good. So let's now move for the next slide. We had successfully prepared our direct labor budget as well and make this thing. See that this is a very basic calculation and still there is a confusion. So I hope that after this webinar, the confusion will be sorted out. The questions will be sorted out. So let's now move ahead for the next thing. That this is a very interesting. This is very interesting thing that product mix. What is product mix? What is product mix? Product mix is something that products which are sold together. Example, register and pen, shoes and socks. For example, as a student, if you will be visiting to the stationery shop, you would be purchasing register and pen. You will be purchasing register and pen. All right. So that means you are purchasing the register and pen in a mix. That means that this is called as a transaction mix. Mix means you are purchasing two products mix. You will be purchasing shoes and definitely you need socks. That means mix. And that is known as the product mix. And this is not the universal law, which I'm now going to explain. This is not the universal law. This is just uh, the assumption. This is just the assumption of the seller. This is just the assumption of the seller that note usually the seller makes the standard ratio. The seller makes the standard ratio. Now, what do you mean by the term ratio? Ratio, for example, 1:2. What do you mean by 1:2? One is referring product A and two is referring product B. For example, this is one. For example, this is one shoes, and next I will be purchasing two socks, one shoe and two socks, for example. So in total, I will be purchasing three products. I will be purchasing how many products? Three products in a mix. And the mix includes one shoes and two socks. This is a standard ratio which seller makes. This is not the universal ratio. This is not the universal applicability. This is just the mentality of the seller. Standard ratio of the products to be sold in a single transaction. See, in a single transaction. And the estimate is based on past practice. Estimate is based on the past practice. All right. So this is my standard ratio. This is my standard ratio. This is not the universal ratio. This is just dependent depends on the mentality and the past practice of the seller. And this is known as the product mix. All right. So what to do with this product mix? What to do with this product mix? This is the very interesting, exam focused, and a little bit complex. It's not difficult. See, I'm giving you a motivational word. No question is difficult. There's no difficulty. There is a complexity, and we should have the ability to deal with the complexity. If you will be assuming the question is difficult, that means you set your mind that the question is difficult and you are not able to solve this question. Do not underestimate yourself. You should say that I can solve this question if I will be practicing more. So all the thing that there is no shortcut to success, all the thing we should participate in the lectures, we should focus on the questions, we should do work, we should do hard work, smart work, and do not create your mindset that the question is difficult. The question could be complex. I totally agree with the complexity. The complexity means that there are different things, and we should not be able to when we should be able to deal with that complexity. Okay, so do not assume the question is difficult. Any question, any paper. Okay, so let's start with this question. And what is written here? What should be the sale budget? What should be the sale budget? Alpha and beta. The company sells two products. The company sells two products, alpha and beta, in a ratio of 3:5. In a ratio of 3:5. That means alpha 3, beta 5. That means totaling in one transaction 8 units. 8 units in one transaction. And this is not the universal law. This is the estimate of the seller that the company will be able to sell 3 plus 5 is equal to the 8 units. And the standard selling prices are $20 and $30 respectively. Assuming, okay, I'm now pausing my question till here. See that in a single transaction, there are 3 units, there are 5 units, and it is sold at 20 and this is 30. 20 and 30. That means 3 multiplied by 20, that's 60. 5 multiplied by 30, that is 150. So that means $210 is my revenue, is my sale revenue expected in a single transaction. Okay, this is now my revenue expected in a single transaction. Now see what had been written here. Assuming that company wants to sell both the products in the standard mix. Whenever the question comes according to the standard mix, we should follow the standard mix. Okay, so the company wants, it is clearly mentioned in the question that company wants to sell both the products in the standard mix, and it wants to achieve 189,000 sale revenue. See, my target revenue is $189,000, and one transaction is giving me $210 revenue. That is one transaction. So how many transactions are needed? That is simply 189 divided by 210. So that means I will be needing total 900 transactions. In one transaction, if in one transaction I will be earning $210, then how many transactions shall I need in order to make 189,000 sale? So simply I'm going to divide, which I had made it 900 transactions. Okay, so 900 transactions I needed, and you should call it 900 mix. It is known as 900 mix. Okay, so in but in one transaction, there is a ratio of 3 is to 5. But in one transaction there is a ratio of 3 is to 5, and 900 transaction means 3 is to 5. So that means 900 multiplied by 3 and 900 multiplied by 5. That means totaling alpha and beta. 900 multiplied by 3, that is giving me 2700 units, and 900 multiplied by 5, that is giving me 4500 units. And that is my answer, 2700 and 4500. That's my answer. See that one transaction is giving me 210, and I need to make money 189,000 total. So that means I need to sell the product in 900 transaction, and in one transaction there is a ratio of 3 is to 5, and I did multiply in order to get the sale budget. Is this question clear to you? All of you, please reply me in the question box, because since it was a little bit complex question. That's good. That's good to have a response from you people. Clara, you are asking for the WhatsApp link. If you are not able to join the WhatsApp group through the link, you can simply contact me on this my WhatsApp number. I will be sending you the link. Okay. This is +923333113959. If any one of you is not able to join through the link, you can simply WhatsApp me. Okay. So that's good to have a feedback from you people. Okay, sure. See that in one transaction you need to sell in a ratio of 3 is to 5, that is 8 units in one transaction, and the selling prices are 20 and 30, and you are having 210 sale revenue in one transaction, and total you need 189,000 transaction. If you are earning $210 in one transaction, then how many transactions do you need to make? That's simply 189 divided by 210, 900. And in one transaction you are selling into 3 is to 5 ratio, you got 2700 and 4500 units respectively. Okay, uh, that's that's very good. That's very good to have a uh, interaction with all of you, and that's good that you got it, Salman. That's very good, and I always encourage the feedback. Okay, and, let's now move to the next. Let's now move to the next question. And the next question is, there's not a next question, there is something else. That's profit is cash. That's profit is cash. Profit and cash, there is a difference. See that profit is not equal to cash. Profit is not equal. Profit is not equal to cash. Then what's the difference? I'm not going to explain it. Imagine that I had made a sales on credit $50 on May, and the cost was $40. The sale is on credit, and customer will pay me in August. And what is the rule of the accounting? The rule of the accounting is that just record the transaction as it is incurred, and it is known as the accrual concept. Now the profit comes from the accrual accounting. from the accrual accounting. And what is the accrual accounting? The accrual accounting is that record record the transactions as it is incurred. So see that I am having a profit of $40 and I am having a cash 0 because the person will be paying me in the month of August. The profit is 40, but the cash is 0, and cash is the actual cash. Cash is the actual cash. So in the month of August, I will be having a cash of $50 because the customer will pay me in 50. So that means profit is not equal to cash. See, in the month of May, I will be recording the profit of $40, but there is no cash. There is no cash because it is a credit transaction. So the profit is based on the accrual accounting. So the profit is based on the accrual accounting. Okay. The profit is based on the accrual accounting and it's not equal to the cash. The cash is something different. The cash is the actual cash. So do not create any kind of a confusion that profit is equal to cash. No, not at all. Profit is not equal to cash. Now, this I have made it that we need to prepare the cash budget. Now, what is the cash budget? Cash budget is simply, you should focus on the cash. Focus on the cash. Focus on the cash. Okay, so what had been written that uh, as you might be familiar from your financial accounting, that receivable ledger and payable ledger, it's opening receivable plus sales, cash here, and closing. That means receivable is debit whenever you make the sale, so the entry would be receivable debit and sales credit. Okay, receivable debit and sales credit. And when the customer will be paying you, so that means cash debit and receivable credit. Cash debit and receivable credit. And here it is the ledger. Similarly for the payables. So how to calculate the cash inflow? This is my cash inflow. The cash inflow is opening receivable plus sales minus closing receivable. And you are having a cash inflows. That is the inflows, cash inflows. And similarly go for the payables. That means it's a liability. If your payable is a liability, that means it will be recorded on the credit side. Opening payable plus purchases, closing payable, and this is the cash paid. This is something cash outflow. So how to calculate the cash outflow? How to calculate the cash outflow is like that. You need to calculate opening payables plus purchases less closing payables. So this is a simple format in order to calculate the cash inflows and the cash outflows. All right. So I need the response from all of you. Have you understand this point that profit is not equal to cash? The profit depends on the accrual accounting and cash is the actual cash. And these are the simple way to calculate the cash inflow and the cash outflow. Before going to the question, I need the response from all of you that have you got this thing? All of you. That's good. Okay, that's very good that I am receiving a response from all of you. Okay, let's now proceed for the question. And following this technique, this trick on the cash budget, this is the question. And this is the question for the exam standard. And what is written here? The following information is available for your concern, and these are the amounts. Just spend 1 minute on this question by reading it very carefully, and if you can, just solve it. At least read the question with a thorough attention. I hope that you had gone through this question. And let's now calculate the cash inflows and the cash outflows. Opening balance and the closing balance. See, receivable balance is 15,500 opening and 72,500 closing. And sales amount during the period 161,000. And remember one thing, it should be credit sales. Remember one thing, that it should be credit sales, and nothing is mentioned the cash is the sale is always on the credit. So cash inflow is calculated as opening receivable plus sale minus closing receivable. Now the opening receivable figure is 15,500, sale is 161,000, and closing is 72,500. So what is my cash inflows? 15,500 plus 161,000 minus 72,500. That is giving me $104,000. That is my cash inflows. And we need to prepare the cash outflow as well. We need to prepare the cash outflow as well. Now, how to calculate the cash outflow? It is simply opening payable plus purchases minus closing payable. Now, the opening payable is 2,200 and 3,500 is the closing. 2,200 and 3,500. And your purchases is 57,500. 57,500. So your cash outflow is 2,200 plus 57,500 minus 3,500. That is $56,200. This is my cash outflow, the budgeted cash outflow. This is the budgeted cash outflow. All right. This is the budgeted cash outflow. And the opening cash is 16,500. If we can total this thing, that the opening cash was 16,500. Cash inflow is 104,000, and cash outflow is 56,200. That is the cash outflow. And totaling this figure, 16,500 plus 104,000 minus 56,200. It is $64,300. and this is known as the ending cash. If it will be surplus, it will be surplus. If it will be in the form of negative, that means it will be called as deficit. But here it is the closing cash budget, and that is in the surplus. Closing cash budget, and that is in the surplus. Okay, so this is the closing cash budget in the surplus. All the way it was not asked to calculate the closing cash budget, but I calculated this so that you people should be aware of the fact that the closing cash budget can be either in the form of the surplus or the deficit. Okay, so one thing to be noted here is that for the purchases figure, note, note, this is a very important thing. What if the purchase figure is not given? What if the purchase figure is not given? Then inventories data would have been given. Sure, inventories data would have been given for COGS. If the purchases figure is not given, then simply cost of goods sold. COGS stands for cost of goods sold. Cost of goods sold. And how to calculate the cost of goods sold? That is the opening inventory plus purchases minus closing inventory. If the purchases figure is missing, so you can simply calculate the purchases figure like that way, that isolate the purchases figure, isolate the purchases figure, and move all the figures towards the left side of is equal. So that is COGS minus opening inventory, and if it will be moving here, then it will be plus closing inventories. So this is the simple trick of the purchases figure to calculate the purchases figure. All right, students. So if your purchases figure was not given, so you can simply calculate the purchases figure like that way by using the cost of goods sold formula, cost of goods sold format. Okay, now students, we are moving for the next we are moving for the next question. We are moving for the next question. Um, and I think we should take a very short break, a very short break of 10 to 15 minutes. And see, this is the cash budget. Okay, this is the cash budget. Be punctual. And according to my side, it's 12:35 now, and you should back at 12:50. I will be resuming the lecture. Okay, it's a very short break to refresh yourself. Okay, just have a tea or water, and I will be resuming exactly after 15 minutes. That's on 12:50 p.m. according to my time, Pakistan Standard Time, and according to your watch, according wherever your location is. Just remember, it's just 15 minutes from now. Okay, and I'm just muting my mic, and I advise all of you, do not disconnect yourself, stay connected, and I will be resuming it exactly after 15 minutes. Okay, your break starts now. Yes, I am back and welcome back from the break. And once again, I need confirmation from all of you that am I audible? My voice and screen is all clear. Kindly do reply me in the question box. Okay. Yes. Sushila, you are not able to join the WhatsApp group. So simple do is that uh, you can WhatsApp me here. You can WhatsApp me here at my this number. I will now be adding you. If you are not able to join through the link, you are here, you are joined. Okay, that's good. So, students, let's now resume after the break. And right now we are here to make the cash budget. Before the break, before the break, I told you that cash is not equal to profit and profit is not equal to cash. These both two are different things. Okay, so these are the budgeted revenues for a business which are shown below. First of all, we should read out the requirement, and that is what is the budgeted cash receipt in the month of March? What is the budgeted cash receipt in the month of March? See, in the month of March, the question is asking me for the cash receipts. And cash receipts means cash inflows. Cash receipts means cash inflows. Okay. Cash receipts means cash inflows. I should write here cash inflows. And the question is asking me for the cash for the month of March. And these are the revenues. And if nothing is mentioned, these are the sales. Nothing is mentioned, these are the revenues, I mean sales. And that is always based on the credit. If nothing is mentioned, the figure is of sales. So, what is a simple trick? What is a simple trick to calculate such kind of question? That first of all, read the requirement that what is the payment pattern. The payment is expected to be received as follows: 40%, 40% in the month of sale, 28% received in the month following that of sale. In the month following that of sale. Following means next month. Following means next month. And 30% received in the third month of sale, and 2% will not be received. That means you are estimating that 2% will become bad debt. And when the 2% will become bad debt, that means it will not be received. So simply ignore it, because this cash is not expected to be received. So 40% in the month of sale, 28% in the next month, and 30% in the third month. Now we are focusing on the cash. We are focusing on the cash for the month of March. And such kind of question may also be confusing for many of the students. And I have made a very simple trick. Simple trick. And what is the simple trick? Just focus on it. What is the simple trick to solve such kind of question? See that select select a month one by one. Select months one by one and apply the payment and apply the pattern percentage, and focus on the required month. Sir, what do you mean by this term, focus on the required month? I should focus on the month of March because this is one of the focus area. And what do you mean by the term select month one by one? See, I am selecting January. I am selecting January and I will be applying all the three patterns. And I will be applying all the three patterns. See, and talk with yourself. Talk with yourself and repeat with me. 40% will be received in the month of sale. That means 40% in January. Talk with yourself. 40% in January, and we are not concerned with January. Forget it. Forget it. 28% will be received in the next month. That is February. That is February. And this is not my month. Forget it. 30% will be received in the third month. That is March. Yes, I am interested in the month of March. So that means in the month of March, I will be receiving 30% from January. I will be receiving 30% from January. 30% from January. Okay. So from January, I will be receiving 30%. That means 80,000 30%. That equals 24,000. Okay, now my first month is over. My first month is over, and forget January. Now focus on February. February 90%. Talk with yourself. 40% will be received in the month of sale. That means February. And I am not concerned with the month of February. I am concerned with the month of March. So that means forget this. 28% in the next month. Now the February, the next month is of January. So yes, the next month is of March, and I am now interested in the month of March. So that means 28%. That means 28%. 28% from Feb. That means 90,000, 28%. And that becomes 25,200. And now, this month has been done. Now forget February. Now focus on the March. Focus on the March. 40% will be received in the month of sale. And March, yes, 40%, yes. That means 40% from March. That means 94,000 multiplied by 40%. And that equals 37,600. That means total cash collection. Total cash collection in March. Total cash collection in March, that is 86,800. And that was the trick which I had applied from here. That was the trick which I had applied from here. That select a particular month, apply all the payment pattern, and see which payment pattern is falling in the required month, and that is the month of the March. And now we have successfully calculated that in the month of March, the total estimated cash collection is 86,800. 86,800. So this is the simple trick to calculate the cash budget. Is it clear? This question is clear because this question is sometimes confusing for many of the students. One question from Saad Ahmed is that, so why did we ignore 2%? Because we are estimating that 2% will become bad debt, will not be received. So that means the cash will not be received. So simply ignore it. So simply ignore it. It's not a non-cash expense. It is something 2% is from the sale, and this will be bad debt. For example, I made the sale in every month, 2% will be bad debt. So this is not the expense. This is something my revenue, which customers will not be paying to me according to my estimation, they will become the bad debt. This is not the expense. This is my amount which the customers will not be paying to me. Okay, Saad Ahmed, have you got it? Okay, you're most welcome. So we have now successfully prepared the cash budget. Okay, let's now move for the next question. And for the next topic, first of all, we should make understanding about the fixed and the flex budget. Then we will be solving the question for this fixed budget and the flex budget. See, what is the fixed budget? Budget is basically the original budget. This is the original budget. This is the original budget prepared at the start of the period, showing the corporate objectives at certain activities using certain assumptions. Certain activities using certain assumptions. Obviously, whenever the budget is going to be prepared, there are certain assumptions of the budget preparer. And what are the assumptions? For example, in the previous questions of the standard mix ratio, the estimations was 3:5. That was the assumption. The certain assumptions. Remember one thing, the assumptions will not change. The assumption will not change. Okay, the assumptions will be. So the fixed budget is something which is the original budget, and you prepare this the first budget. The first budget at the period start, showing the corporate objectives at certain activity level using the certain assumptions. Okay, the assumption will not be changed. And what is the flex budget? Flex budget is something the assumptions are same. See, assumptions are same. Assumptions are same, but the budget will be on different changing activities. Assumptions are same, activities are changed. That is something the flex budget. Flex budget is something that we will applying the same budget, same assumptions on the different activities, because in order to flex the budget, in order to flex the budget. Okay, so flex budget is something flex budget is something which we'll need to prepare in order to make the activities like with like, and in order to make the comparison. For example, the fixed budget is of 1,000 units. The fixed budget is of 1,000 units, for example. And if my actual result is 900 units, so these two are not comparable. These two cannot be compared. No comparison. So in order to compare this 900, we need to have a budget of 900 units. 900 units budget. So what we are going to do, we are bringing some changes in the activities. The assumptions are same. In order to compare this actual 900 units, I should have a budget of 900 units. So I will be adjusting the original budget. I will be adjusting the original budget based on the 900 units, so that I will be in a position to compare the actual results. In order to compare the actual results, I should have a budget of the units that is flexed. Okay, this is the flex budget. Uh, let's now move for the next question. Sana Zakir, if you're not able to join, you can simply WhatsApp me here in this number. This is my number, and you will be added. And the link is active. The link is not deactivated. It is active. If still there is any issue, you can WhatsApp me at this number. Okay, now students, this is a very interesting question that ABC ABC is the restaurant that offered two meals. ABC is the restaurant that offer two meals. Just read the question at your pace. First of all, you should read the question at your pace. Yes, Aisha, Atif, actual result is always compared with the flex budget because the activities are same. Because the activities are same. That is why. Because the activities are same. That is why. You're most welcome. Okay, students, just try this question. Just test yourself. Test yourself. At least try. Solve this question. As I told you that teaching is a two-way communication. Try this question. Solve this question. I'm giving you 2-3 minutes. You can take 5 minutes, but solve this question. And whatever your answer is, I have opened my questions window. Whatever your answer is, write in the question box. Okay, I am removing the limitation of time, but I need answer from all of you. One thing more, my encouraging words. Please calculate. Do not get afraid from the wrong answer. I always say to my student, since I have got experience more than a decade, I always say to my students, just solve your answer. Don't worry about whether the answer is right or wrong. I I appreciate that you calculate the wrong answer. I appreciate. Why? Because if you will be calculating the wrong answer and later on the tutor will be explaining you the right answer, that means you are in a position to analyze your mistakes, because it is a very, very common element that people even do not know that where they are lacking and why they are receiving the poor marks or facing the failure, because they do not. If I don't know my mistake, what I will be resolving. So in order to calculate, in order to find out your mistake, there is a first thing required from you people: solve the question. Don't worry about whether the question is right or wrong. I prefer that you calculate the wrong answer. See, I have received up till now two answers from Mr. Muhammad Farid and Sagar Kumar, and both of them giving me the different answers. That means it quite may be possible both are wrong and one is right and one is wrong. I don't know, I will be explaining it later on. But I appreciate these two people. At least they have given me the answer. So must calculate the answer. Right or wrong is not the thing to focus on right now. Right now, to focus on using the calculator, use your brain and your paper. And when I will be explaining, just find out your mistake where I was wrong. Yes, sir, I was wrong over there. That point was right. So here I need the learning gap, and I need to improve this thing. Okay. So Farid and Sagar, I appreciate your efforts. And all of you, see, I have removed that time limitation. Take 5 minutes, don't worry. But when I will be explaining, you should stop trying. I want answer from all of you. Okay? Just read the question again and give me the response, give me the answer. See, your answer will be in two form: food sale and drink sale. Okay? Food sale and drink sale. I will not be giving you any kind of hint to solve this question, because I want you people to try this, because it is the exam standard question. Okay, take your time and solve this thing. You're welcome, Sagar. Okay, Clara, I noted your answer as well. Waiting for the next students as well. Okay, Mohammad Farid, noted your answer. What about other students? Okay, Aisha, Atif, you also give another answer. Yes, see, the answers are different. And literally, I appreciate this thing. When I receive the different answer from the students in my class, I really appreciate this thing, because the students are trying, and continuous try will give you the success. Muzammil Sheikh, that's good. You also gave the answer which was similar to another student, and it quite may be possible that this answer is correct, Muzammil Sheikh. But I will not be mentioning the figure, and still I cannot say that the answer is right or wrong. Okay, Fiona Trish, I also noted your answer. Come on, champions. You all are champions. First of all, think of yourself that you can do this. Okay. Uh, That's appreciated. Ahmad, Usman, Ahmad, Yusuf, Salman. I'm mentioning the name of the students in order to encourage, in order to give you the appreciation, because it's a non-financial factor, but it creates a huge impact on the performance, motivation. And it is also the part of your syllabus as well, that budget should be prepared in such a manner that in organization people should be motivated, that they have something to achieve. Remember this thing. Okay, now students, now time up, and please stop writing, all of you, and focus over here. See that ABC is a restaurant that offer two meals. Meal A, you can call it a pizza, and meal B, you can call it a burger, with a selling price 20 per meal for meal A and 25 per meal for meal B. Following is the budget on 1,000 meals. Meals means units for the restaurant. And this is the budget for 1,000 meals. In the month of May, it actually sold 1,400 meals, and the budget is of 1,000 meals. We cannot compare 1,000 meals. See, 1,000 meals and 1,400 meals. These two figures are not comparable. These two figures are not comparable. Why? Because there are different activities. There are different activities, and see that comparison should always be comparison should always be like with like. What do you mean by the term like with like? Like with like means same activity. See that I have actual results of 1,400 units. I mean 1,400 meals. So in order to compare this, I should have a budget. I should have a budget of 1,400 units. But we have 1,000. But we have budget on 1,000 units. So what I need to do, I need to prepare the flex budget. Yes, I need to prepare a flex budget for 1,400 units. I need to prepare a flex budget for 1,400 units. Okay. So what was the estimation? It was estimated that 60% of the sale of meal A and 40% of meal B. First of all, I am now calculating the food revenue. I am now calculating the food revenue, and it's meal A and it's meal B. Focus on 1,400 because we have got the actual result for the 1,400, but we do not have the budget on 1,400 units. So we need to prepare the budget, flex budget for the month of May on 1,400 units, and that is my 60% and that is my 40%. So 1,400 60%. 1,400 60% equals 840, and 40% equals 560. And what are the prices? 20 and 25. $20 and $25. So 840 multiplied by $20, that becomes 16,800, and 560 multiplied by 25, that becomes 14,000. So collectively my sale budget from the food is 16,800 plus 14,000, that is 30,800. And congratulations to all those students who have calculated the right answer. Okay, well done students, well done, because you had calculated the new question by yourself, and this is one of the initial step of your confidence and your success. Next, the next point is about the drink revenue. The next point is about the drink revenue. What is the drink revenue? See, drink sales is 5,000, and it is obviously for the 1,000 meals. Drink is for the, see, I am writing here the drink revenue. The drink revenue. 5,000, the drink revenue over here. The drink revenue, that is $5,000 divided by 1,000. That means one drink, when you go to the restaurant, or when you will order any food, you will be having a drink as well, and that was $5 per unit, I mean per meal. And drink revenue, simply you are having total meals, that is 1,400 units multiply by $5. There's a per drink. And now 1,400 multiplied by 5, that is $7,000. And again, congratulations to all those students who have given me the correct answer. It is a very simple and exam standard question, and you can say that your total sales would be, you can simply add it up. 30,800 plus 7,000 equals 37,800. This is your total sale revenue. This is your total sales or revenue for the restaurant. That is the budgeted sale revenue. And we have prepared the flex budget based on the food and the drink. And remember one thing, that actual is always compared with the flex budget. I am writing one statement here. Actual results are compared with the flex budget. Actual results are compared with the flex budget. All right. Actual results are compared with the flex budget. Just focus on this thing, and I am allowing you only 1 minute for you people to copy this question, to copy this slide, if anything is remaining at your site. Okay. Yes, Fiona, it's okay. Yep. Saad Ahmad, yep, you're right. Hilda, the point was that 5,000 drink sale was for 1,000 units. So what I did, 5,000 divided by 1,000, and we got 5 per drink, $5 per meal, the drink, and we have total 1,400 meals. So in order for the one meal, the drink amount is $5, and I did multiply with 1,400. Yes, Hilda, is it now clear? Hilda Mahalangu, is it now clear? That's good. Okay, that's good, Yusuf. Okay, I'm allowing you 1 minute for you people to copy this slide or anything if it is remaining, so that I will be proceeding for the next slide. Okay, students, I think I should proceed towards the next slide, and the next slide is about the it is about the theoretical aspect. It is about the theoretical aspect, and we cannot ignore the theoretical portion of the syllabus. The terminology is budgetary slack. The terminology is budgetary slack. And what is the budgetary slack? The budgetary slack, it is something the difference. It is something the difference between true budget and intentionally wrong budget. Now, what is this budgetary slack, and what are the main uh, point of view of the budgetary slack? See, I call it simply budgetary slack. Simple means manipulation in the budget. Manipulating budget. It simply means manipulating budget. Manipulating budget in such a way, manipulating budget in such a way to produce healthy results. How come healthy results? This is something unethical activity for the with the organization from the side of the employees. And now let me explain what do you exactly mean by the term budgetary slack. There are two kinds of budget. The budget is of obviously the cost budget and the sale budget. Okay. Now in the cost you can simply categorize into direct material, direct labor, production overhead, so and so, etc., etc. There are two budgets. Number one is the cost budget and number two is the sale budget. First of all, I'm going to give you the simple example of the cost budget. Imagine example. I made a budget. I have undertaken a very honest research, and I concluded that XYZ activity, and I concluded that XYZ activity, the true budget, would be of dollar 15,000. There's a true budget. There's a true budget. But what I did intentionally wrong budget. Intentionally wrong budget. That is 18,000. I have overstated my cost budget. I have overstated my cost budget in order to make my target more easy. Now, suppose my actual cost is dollar 17,000. If I look on the correct perspective, my performance is poor. My performance is actually poor. My performance is actually poor by 2,000. All right. My performance is actually poor by 2,000. But I did not follow this. I made intentionally the wrong budget. And the wrong budget was of 18,000. Actually, my performance is poor by 2,000. But what is the reported figure? The reported figure would be that, sir, I made a budget of 18,000 and the actual cost was 17,000. That means 1,000 favorable performance. 1,000 favorable performance. That will be looks like. And this is something a false report. This is something the false performance. See, I did not made any kind of manipulation in the actual result. What I simply did, I simply manipulated the budget, that whatever the cost will be, whatever the cost will be, whatever the actual cost will be, my performance will be healthier performance. So I ignored this thing and I made a budget just like that manner in order to manipulate the figures so that I will be having my good performance. Similarly for the sale budget, for example, if the season is going on, for example, if any of the season in the country is going on, the true budget would be, for instance, let's say $50,000. But I intentionally wrong sale budget. I intentionally understated by 10,000. That means 10,000 is the slack, and here 3,000 is the slack. It is a difference. It is a difference. And imagine if my actual sale, would be, for example, 55,000. So actually my performance is so good, but my performance is good by 5,000, but actually the performance will be reported that against 40,000 sale budget, the company had generated 15,000 favorable performance. So that means the budgetary slack has got only two example. The budgetary slack has got only two example, that is overstated cost budget and understated sale budget. And what is the main purpose of budgetary slack? To show artificial good performance. The performance will be reported as good, but it's not actual, it's something artificial. To show artificial good performance. Artificial good performance. And see, this is not good for the organization, not good for the company, not good for the company, because this is a false performance. It is a false performance. So budgetary slack simple means that design the budget in such a manner that whatever the actual cost will be, your answer would be right. Your answer, sorry, whatever the actual performance would be, your reported performance will be good, but it would be the artificial performance which is not favorable for the company. So what is the budgetary slack? It is simply means the difference between the true budget and the intentionally wrong budget. So here 3,000 is the slack, here 10,000 is the slack. It is the slack. Okay, slack is the difference between the true and the intentionally wrong budget. Now moving towards the next slide, and the next slide is about the budget committee. Now what is the budget committee? See that if you give me the target to prepare the budget for my own department, there is a possibility that I may add slack in order to show my good performance, so what is the budget committee? Budget committee is something people from different departments, people from different departments, and the different departments may include like marketing department, like finance department, like your production department, like your purchases department, like people from store, the collective people from different departments who are collectively responsible for the budgetary tasks. And the main aim is to reduce the chances of budgetary slack, because everybody is right now here in front of each other. There, for example, there is a round table, there is a square, there is a rectangle shaped table, and all of the people are sitting here in a meeting, and that every departmental budget is being prepared in front of all of the departmental managers or the workers, and the chance of the slack is reduced. But it is also preferred that at least one person should be the member of professional accountancy body like ACCA. This is not something compulsory. This is something a recommendation. This is preferable. This is not something compulsory, because management accounting is not the compulsory rules. Management accounting has the principles in order to better improve your organization system and process. So it is recommended that at least one person should be the member of the professional accountancy qualification like ACCA. So budget committee, what is the main aim of budget committee? Is to discourage the chances of budgetary slack and share the ideas as well. And here we will be having the three different approaches, the approaches and the style of the budgeting. Number one, top-down approach. Top-down approach is also known as the imposed style. Now, what do you mean by the term imposed style? That means something dictation, dictatorship style. So here, this is the approach of the budgeting, that seniors will prepare the budget. Seniors will prepare the budget and impose on juniors. Next point is the bottom-up approach. The bottom-up approach is the participative style. You can also call it like a consult style. that seniors are having the consultation with the juniors, but still the final decision making lies in the hands of seniors. So what is the bottom up approach? That juniors give ideas, juniors participate, juniors participate, that means giving their input, giving their input, and seniors will take the final decision. The senior will take the final decision. This is my bottom up approach, or you can say the participative style. And the third one is the negotiated style. What do you mean by the term negotiated style? Negotiated style means that budgets will be prepared, budgets will be prepared on the basis of consensus of senior and junior, senior plus junior. Now, what do you mean by the term consensus? That means mutual understanding. Mutual understanding. So that means you can say that it's a joint decision making. It's a joint decision making of senior and junior. So these are the three approaches of and the style. And obviously these behavior of the senior, either dictatorship, either consultation, either negotiated style, will leave the motivational impact on the workers performance. And this happens in the real life in the organization, that what is the treatment of the senior with the junior, and it will reflect on the performance of the juniors. So according to the different scenarios, sometimes this style better, sometimes this style better, sometimes this style better. And remember one thing, there is no one best style in the organization. It totally depends on the case, on the situation given, that what is the possible best style to deal with the juniors. This is something, the motivation. And as I have told you earlier, that budgets also include the motivational impact. Okay, so these were some budgeting contents. And what I believe, that alhamdulillah, we had covered majority of the budgeting portion, that is the cash budget, functional budgets, and flex budgets, yes, as well. And now the time comes in to solve the objective test question, that is the case based objective test question. Okay, case based objective test question. See, first of all, I would like to show you the full question, and this is my case based OTQ, case based OTQ, total 10 marks. Okay, you will be having such kind of question with different task, with different tasks. I cannot say you that there will be 5 requirements, 2 requirements. I cannot say you, nobody can confirm it. But see that this is the question, this is the question, and it will be till the next page, till this page, totaling 10 marks. See that Baba Limited is a manufacturing company which produces a product called Gamma. The following information is available relevant for the budgeting context. See, requirement number 1 worth 2 marks. Okay. Requirement number B, that is the case study, worth also 2 marks. How many marks? 4. Requirement number C, requirement number C, 2 marks, 2 marks, 2 to 4, to 6, and to 8. And these are for 1 mark, tick and cross, whatever we will be reading and marking tick and cross respectively. So this is called the case based OTQ, case based objective test question. And nobody can assure you that whether it will be for 3 requirements, 4 requirements. It quite may be possible that one OTQ worth will include the 10 requirements worth 1 mark each, 1 mark each. It quite may be possible, but usually based on the feedback of many of the students, they are saying that In a real exam, they are receiving 3 to 4 requirements. Just like here, you are having 3 requirements. Okay, so this is the objective test question, which is the case-based OTQ. Students, just come on to the question box. First of all, do tell me, do you understand? Do you understand what kind of case-based OTQ is? Okay, Sweta, Sagar, I will be displaying you the previous slide. No worries. First of all, do tell me, do you people understand what kind of OTQ includes? Case-based OTQ. Everybody, please leave your response in the question box. Okay, we will now be solving. And 2 students have requested for this slide number 28. And you can take the picture, or you can copy whatever you are doing with this slide number 28. I'm giving you 30 seconds window. Hurry up, copy or take the screenshot, whatever. 20 seconds. Okay, students, that's good. And now, now this is the case-based OTQ, and 1, 2, 3 requirements are there for 10 marks. Okay, so first of all, let's solve this question. We need to study the question right from the start. Baba Limited is a manufacturing company which produces a product named Gamma. The following information is available relevant for the budgeting context. A. A trainee management accountant was hired, and you are in a process of training related to the budgeting process of the company. Assume yourself that you are a senior person. Which of the following about the budgeting is not correct? Which of the following about budgeting is not correct? Number one, budget compel planning. Yes, it's correct. Budget coordinate activities. Yes, it's correct. Budgets are usually prepared on ad hoc basis, reflecting the feeling and the desires of the management. The feeling word refers to the personal feeling? No, that's not correct. And ad hoc means on an emergency basis. No, budgeting is not on an emergency basis. Imagine that I am free right now. I am doing nothing. I said, let's now prepare the budget. It's not something to play. It's not a playing exercise. It is a formal organization. So this is not correct. This is not correct. And this is my answer. And next point written here is that budgets are used to measure the performance. Yes, it's correct. Because your actual performance will be measured against the budgets. So this is the correct. This is not correct. And this is my answer. Option C. Now, question number 2. In your training agenda, there is also the topic of flex budget. Which of the following best define the flex budget? Hurry up, read all these things, all the 4 statements, and then you can answer whatever your flex budget definition is according to your mindset. Yes, uh, the flex budget is basically, that is option C, the budget that does respond to the changing activities and is prepared on different activities based on the original assumptions. That means the assumptions are same, but the activities are different. Congratulations, you have gained 2 marks and the 2 marks from this case-based OTQ. Now, these 2 questions, A and B, little bit challenging, but I will be solving this. Uh, I'm not giving you time to solve this because we are having a shortage of time right now. We have got 15 minutes left. for today's session. So I think I should solve this, but I'm giving you a time window just to read this data, just to read this data at your own pace. Hurry up, read this data, and I will be calculating this thing. Okay, now students, now what is this? Further information is available related to the manufacturing of the product, and following estimations are available for your concern. Material needs 920 kgs for every 200 units. Material needs 920. Material needs 920 kilograms for every 200 units. For every 200 units. That means in order to make one unit, we need kilograms per unit. Kilograms per unit. That is kilograms on the numerator. That is 920 kilograms. That is 920 kilograms and 200 units. That means 920 divided by 200 is giving me 4.6 kilograms per unit. Okay. So 4.6 kilograms per unit with an expected waste of 8%. And remember this thing, this 4.6 kilogram is after 8% loss. That is, it is the need, and it is itself showing 92%. And material cost is $7 per kilogram. When the material purchase exceeds 4,500 kilograms, then the discount of 4% will be given from supplier prospectively. Now, what do you mean by the term prospectively? Prospectively means after the range. Prospectively means after the range of 4,500 kilograms. The word prospectively means something will be applied, after a particular range. That is, now first of all we need to make sure what is the exact amount. Calculate the material cost for 1200 units. Calculate the material cost for 1200 units. Now what is the cost for the 1200 units? For the 1200 units we need to calculate. Now, for one unit, we need 4.6 kilograms. For one unit, we need 4.6 kilograms. and I am solving the solution over here. Case based OTQ, that is part C. That is part C, and part C, part A is the cost of materials. Cost of materials. Okay. So I need your thorough attention for this specific case study. That means per unit 4.6 kilograms. Okay. And this is something which is after 8% loss. That means it is showing 92%. Okay. And how many units are there? There are 1200 units, and 1200 units multiply 4.6 kilograms. 1200 multiplied by 4.6, that is 5520, and that is showing 92%, and we need to have 92 multiplied by 100, that means totaling 6000 kilograms. 6000 kilograms to be purchased. 6000 kilogram to be purchased. Okay. And what is the cost? What is the cost? I should refer the question. The question is saying that 1 kilogram is for $7, but the discount will be applied. 4% discount will be given prospectively when the purchases will exceed 4500 kilograms. So that 6000 kilogram will be split into two categories: 4500 kilograms and 1500 kilograms. Till 4500 there is no discount. When it will exceed, the discount will be applied prospectively. The word prospectively means after the range. Prospectively means after range. That means 4500 will be available. That means 4500 kilograms. See, this will be my total cost. 4500 kilograms will be available at $7, and 1500 kilograms will be available at $7. No, $7 is to 96% because of 4% discount. And this will be my final material figure. So 4500 multiplied by 7, it's 31,500. It's 31,500, and 1500 multiplied by 7 multiplied by 96%, that is 10080. And the totaling of the material amount is 41,580. Don't you people worry about it if your answer went wrong. So no need to worry about it. Just learn it. This is the time to learn, not to underestimate yourself. This is a time to learn, not to underestimate yourself. Okay. So this is something after the loss. I made it gross, and prospectively means after the range. So it means that 4500 is my range, and when it will be exceed, the discount will be applied on this figure. Okay, because of the prospectively. So this was my material cost. Next, I need to calculate the next requirement. And the next requirement is about the labor cost for 1200 units. To make 1 unit, it needs 14.24 labor hours with expected idle time 11%. Okay, that sounds good. Part A and then part B. Cost of labor. The cost of labor, that is how many units? 1200 units. And in order to make 1 unit, it was 14.24 labor hours. 14.24 hours. That means 1200 14.24. That's equal to 17 0.088 hours, and see that this is the active time. This is the active time after 11% idle. So that means it is showing 89%. That is divided by 89 multiplied by 100. That means total payable hours. Total payable hours was 19,200 hours. And this is a very simple calculation. This is a very simple calculation because we have also covered this thing in our previous slides. Now the point to be noted is that about the labor cost. Cost of labor. See that in the question it was given that labors are being paid at 9.18. Yes, inflation index is currently the labor index is 102 and expected to be 106 in the upcoming period. That means the inflation rate are going to be increased. 9.18. See that current rate is $9.18 and current inflation index is 102. And wherever you are, you should divide, and where you want to go, you need to multiply. So in the future, inflation would be 106 index. So you know what you are supposed to do right now? You are supposed to calculate the labor rate. It is showing 102. So what I will be doing? 9.18 divided by 102 multiplied by 106. Where you want to go, you need to multiply. Where you currently are, you need to divide. So 9.18 divided by 102 multiplied by 106. That means in future 9.54 is the labor cost. So here I will be having my final answer, that is 19,200 hours multiplied by $9.54. That is my labor cost, and this is my final answer. That is $183,168. This is my final answer. So this was a very interesting question. What I believe so, isn't it? Isn't it? All of you give your response. Hello, all of you give your response. Mr. Shalan Amir, why did not we apply the discount on entire 6,000 kgs? Because of the statement written prospectively. The statement written prospectively. Prospectively means after the range. After the range. See here. Prospectively means after the range. So discount, when it will exceed 4,500, then discount will be applied prospectively. If it would have been written the word retrospectively, you will be applying the discount on the entire 6,000 kilograms. But it is not written the retrospectively. It is written the prospectively. It is written the statement prospectively. Okay. Shahlan Amir, is it now clear? Yes, Ahmad, it depends on the calculation. It depends on the data. According to this data, the labor calculation is just like that way. Okay, that's fine. Now we have left with only two statements, and Alhamdulillah, as per my plan, we have completed our budgeting context. Now see, number one, the rules and guidelines under which the budget is to be prepared is known as budget manual. Budget manual is a piece of document, and yes, it is right. It is a document. See, when you will be purchasing a mobile phone or a laptop, there will be a manual, there will be a booklet, how to use that, how to operate that machine, and that is known as the manual. And the rules and guidelines under which budget is to be prepared, that document is a budget manual. That is correct. Number next, in a newly formed organization, participative style is more suitable. No, no. In a new organization, it is preferred Top down approach. Top down approach, that is the impose style, because obviously we do not know each other, so a person should have the top down approach because it's a newly organization. So participative style is not suitable. Top down approach, impose style is more suitable for that. So this was the agenda of today's class, and what I believe, Alhamdulillah, by the grace of Almighty Allah, we have completed our target. And day one, it was the topic of budgeting, which we had successfully completed. Now, one thing more, if any of the student is not able to join that WhatsApp group, this is my WhatsApp number. I am giving you just 10 seconds window. Note this number. This is my number. You can WhatsApp me so that I will be adding you in the group. And the group link is also shared in the question box. Okay. You can take that screenshot as well so that you will be part of the WhatsApp group. And later on, I can facilitate you even after the webinar. So now 10 seconds are over, and here is the MTQ which we had done. Please come on to the question box, everybody, just for 5 seconds. Please come on to the question box, everybody. Do you think that this session was productive of today's class? Have you people understand that thing? Please leave your response here. It was productive, interactive, and beneficial for you. I believe so. Okay, that's very good. And thank you so much for your valued feedback. Thank you so much. Okay, now the time up, and see you in the tomorrow class. And there's a same procedure to join for the tomorrow class. And tomorrow agenda I have already shared with you people. So see you tomorrow. Bye bye, take care.